Alright guys, I hope you're all doing well. Since I got a lot of requests to break down the trade, this is what we're going to be doing in this video. Alright, so let's just jump right into it. So Wednesday wasn't really like a crazy day, it was very balanced, okay? Um, Basically meaning it was kind of in a range, so basically from 10,640 till about here. Very clear to see that on the chart. Okay, but nothing too much about that. Just we were kind of in a range. Now, I had a couple trades earlier. I had a winner, like a $2,000 winner earlier. Had a couple small losses, but this was a trade that I kind of wanted to focus on since it got a lot of attention. Obviously, being large in size, it was $11,050. Um, so basically, what happened was that I saw a lot of buyers coming up from this low. Okay, and I saw that pretty much on the tape, and I will show you right here quickly. Alright, this is a replay, so I'm just going to replay the day for you guys to see the progression of the trade. Alright, but right here we just saw a lot of people buying, getting into the market after we kind of had that little sell-off right at 11:02. Around that time we started selling off, right? But there wasn't too much selling. It was just kind of like liquidation, which is pretty much buyers getting out of their positions. So that's usually what happens when there's no real selling. Well, it's selling, but it's not real selling. There's nobody with size jumping behind this move, getting, powering it and letting prices come down even lower, right? So whenever it's a move like that, you will see a reversal, right? So like this, all this move was pretty much reversed, right? Because there wasn't enough selling to keep the market at these prices. Now, obviously the market doesn't go up or down in straight lines. There's rotations, right? There's little pullbacks here and there. Okay, like the whole point, or my whole theory, is to pretty much look at these pullbacks when they're going into areas that are going to be aggressively bought or aggressively sold. Okay, so now when we got to around, it was 255-ish, as we can see here, 255-ish. Yep. I found this area of aggressive buying right here. Okay, now when we traded back into it, look how we came in aggressively to that. Look at this big red selling bar, right? A lot of aggressive sellers here. Okay, we're gonna get into the tape in a little bit so you guys can see what happened. We sold into it, right? I saw them absorbing all these sellers down here, and then as soon as we got the buyers stepping in, that's when I jumped in with them, and my fill was 74.25 for 10 contracts, right? And then obviously we went up, and I took my profit around 29.25 right here. Okay, and I'll be explaining why I got out in a couple minutes. Alright, so basically that was it. So I found a lot of buyers. To keep things short, I just found a lot of buyers, and I just kind of went with them. Okay, and this is now I'm gonna go into the tape, to the order book, and show you guys what I saw. Don't worry if this is a little confusing right now. I'm gonna set it up for you guys to see it in more detail. Alright, so right now the time on the simulation is, or on the replay I mean, is 2:54, which was right about here, right before they started buying it. Okay, so mainly what I want you to focus on is going to be, alright, so mainly what I want you to focus on is watch the orders down here, the bids. These are all the buyers. Obviously these are all the sellers. Okay, and we are going to watch as these buyers start getting aggressive. Okay, you will see what I mean in a little bit. Okay, but just watch the buyers. Okay, right, this price we're at 570, so that's about here. Right, it's just a little bit after we had just tested the buying area. Okay, so this is where you're gonna see the buyers just stepping in. Okay, I'm gonna start playing this. I resume. Okay, you see that right there? You see how we just sweeped the book? That was a little fast little move up like this. Just kind of took all the offers out of the book, just bought them all up, right? As soon as you see that, you know there's aggressive buyers. Okay, that's one of the little signs that you want to look for. Okay. Now don't forget you're keeping an eye on the tape. Okay. Okay. Now, we know that there was initially some buyers stepping in before we hit this level right here. Okay. So look, this is about 66. That's about, let me draw it on this so you guys can see. So on the rectangle, 66 till 60. This is the same as this. Okay, just so you guys can see. Now, you guys recall before how we saw some buyers stepping in? Those are just buyers that are stepping in before the area. You know, people that just want to get in before we actually get into this move. Okay. Now, obviously, there was still selling. Sometimes market's not gonna front run it. It's not gonna front run every time, right? Most of the time, it's gonna hit the actual area. But sometimes some people jump in before, and you can see that happening. Okay. Now, once we got inside the area, look how many orders are sitting here at 10,565. You guys notice how there's like a orange line right here? That's all orders. Okay, there's 31 buyers or 31 contracts bid, meaning 31 contracts on the buy side. Okay. Now, when you see that, you know that there's a lot of interest. Okay, there's somebody here that wants to buy 31 contracts. Okay, and you kind of want to follow, well, not follow what they do, but you want to be watching what their intentions are. Okay, now still around here. Okay, guys, this is very fast. This is probably like 15 seconds. This from here to here. It's nothing crazy has happened yet. Okay, so right now we're just watching the buyers get aggressive on their entries and their orders. Okay, let me hit resume. See that? You guys just saw that right there? You see how we just sweeped up? Aggressive buying again, and now it's more significant. Look, because now what's happened is, let me stretch this a little over. Now what's happened is that we entered that area, right? That area of interest that we had before, that we knew that there was aggressive buyers there, and now we see, okay, look, they executed a lot of sellers, a lot of sell orders down here, right? Look, we sold 38 contracts, right? Obviously, visually you can see that this bubble of volume is relatively bigger than all of these other ones, right? So we know that there's a lot of action or a lot of trades going on down here, and we managed to get up here. Okay, so what is that telling you? That all these people that are selling, they're all getting pretty much trapped, right? Because if you sold right here and the market starts going up, obviously you're gonna want to get out. You're not gonna hold a losing trade, right? So you expect people to start getting out, pushing the market even higher. Okay. Now we're continuing to watch. Now I was watching this as it was happening. So 55 right now, it's 55. So right about here. So this is where we're at right now. Okay, right here. Let's keep playing. Let's keep watching. All right, still aggressive buying. All right. So at this point, as we can see, we already got some aggressive buyers in this market. So it would be safe for an entry, right? Now the stop obviously would be right below here because all the buyers that jumped in here should in theory defend these prices. So you shouldn't be, if price manages to get back below, sorry about that, back below here, you know that the trade is wrong, that the buyers here weren't strong enough to push the market up, so then obviously there's no reason for you to be in the market. So you just get out. Okay, so the ideal entry would have been around here, so around 71. Okay, but since it's kind of fast, this happens in seconds. Okay, and I don't remember exactly what I was looking at, but I missed it by a couple seconds and I got filled at 74.25 average. Okay, so not too bad. So it was around like right here, 74.25. Okay, not a bad entry, but obviously not the best. I gave up 3 points just because I wasn't focused uh, at that specific second, which is also just like a lesson. Always be focused no matter what, because it'll make you give up some ticks in profit sometimes, and you know it'll throw you off at times. But anyways, yeah, I got filled in at 74.25, and again that was because I saw all these aggressive buyers. Look, a lot of volume in the buy side here, lots of volume. If you can just see this visually, all of these are mostly green, 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 right? These are all buyers. And now look at the cumulative, at the volume delta right here. This is basically just telling you the change in the orders, right? So it's saying that there's more, they're adding more orders, adding orders, right? That means basically people getting in long. Okay. Now we're also just keeping an eye on this, right? Because this is just more orders getting behind the market, right? Buyers just jumping behind it, right? And these will defend, um, if price comes down, they will defend this price, right? So this is a little bit of a little safety net, right? Because if we start seeing, oh, they're just sweeping through all these orders, right? Then maybe it's time to take off a couple contracts, right? Or just take some profit, because if they couldn't defend this price, then it's likely that we just come back down and try again over here. So let's just keep watching. Also notice there's a lot of orders up here, sell orders. Price generally gets attracted to liquidity. Okay, look how we're forming support nicely down here. Okay, we're supporting the market higher. Right, so if we manage to get through all these orders, you know that the order's wrong, right? So it wouldn't be necessary to have a stop down here, once we have all these orders supporting our market. Okay, another little bit of aggressive buying right off these orders down here. I'm going to speed it up a little more. I'm going to zoom out and speed it up a little more for you guys. That's on 4 times the speed. This is what it looks like in real life, just obviously not as fast. We can see the levels developing, right? So now we have all these orders on here. So now we would have moved up our stop. At this point I was break even already, because if we got through all these buying orders easily, then obviously the trade could go lower, so there's no point. So My stop at this point was already break even. Okay. Now we're still watching price go up and defending. Now remember, price attract. There you go. We get attracted to liquidity, right? More orders behind it. More orders behind it. Okay. Now we're looking for them to take out this one, right? And now we're looking to defend this one too. Aggressive buying, large aggressive buying right here. Okay, let's see. Oh, we took him out, right? Now let me pause this. So at this point it's about 3 o'clock, right? So that's about right here, 3 o'clock. This is this, okay? This is the same thing. Now, keeping an eye on the profile, I knew of certain key levels like this, like the point of control from the day before, right? From the 7th. That was about 10,614. And also the day, like I said, was pretty range bound, so we were pretty much just trading inside. So at this point it was 3 o'clock, like I said, so it was right here. So price was right around 10,610, right? So about here, right on this period we were trading. Okay, now the value area high was right here for the day, so that means that value for the day was within these prices. Okay, let me delete this to keep it simple for you guys. Price was within these value was within these prices. Okay, so we're not expecting a move to be anything, you know, like up here or like anything crazy, right? We're kind of expecting price to stay around these levels, right? Because this is where value is. So right around 3 o'clock when we're here, I'm considering, okay, maybe we're probably gonna get around 10,630. You know, that's where we're gonna start to find sellers, because that's the top of value and price wants to get back below to the point of control, which is where the most price has traded for the day, right? So once it was around 3 o'clock, I was thinking, okay, maybe this should be a good price to get out. Okay, so then I was watching, and that's all the way up here. Okay, so we already know there's a few orders stacked up at 10,630. Okay, but there's also some at 10,620. Okay, so now we're just kind of watching which prices get taken, you know, where buyers are going to step in. We're just going to follow, you know, kind of letting the trade unfold. You know, obviously at this point we already logged profits. Look at all the support underneath. Okay, so if we manage to get below here, obviously the trade is wrong. So this would already secured 20 points. I think it was about 20 points of profit already. So we're just managing the trade. You know, this is pretty risk off. So just watching kind of what the market wants to do and what the market wants to give. Okay, let's continue. All right, we're kind of, there's like a little struggle here, right? Nothing to worry about, but just a little struggle. Like I said before, markets don't just go up in a straight line. Okay, we got bought at these prices by those buyers. Okay, that's a good sign. They're supporting that price. I'm speeding it up a little more. Oh, okay. All right, so at this point you see we kind of just got to this price, 620, 10,620. And you can see a lot of volume was developing up here. Okay, you see how these, very clearly you can see these balls, these bubbles are bigger than these, okay, than these past ones, right? There's obviously, that's very noticeable. So that's kind of like a little warning sign already. Okay, that's kind of like a little flag that it's taking a lot of volume to move the market. um, a certain distance, right? So look, it took us this much volume to move about like 5 points when it took us this much volume to move 5 points just before, right? So something changed. Okay, so this is like a little warning flag. Okay, now we're just watching how we react at these levels. If we start seeing a lot of sellers coming in at these prices at 620, I would have probably gotten out, right? But we're just gonna watch and see. All right. So as you can see here, we got a lot of sellers. Okay, it's a lot of sellers, but we got no follow through. Okay, so and in this case, if I had just taken the trade, like let's say right here at 1600, and I saw the lot of sellers come here, I would have probably just gotten out right here. But since I was already like I think at this point it was maybe like 30 or 40 points in profit, I just kind of held it, to see what they would do, because they kind of just held off right around here. Okay, but normally I would have just gotten out, because after all we are kind of just hanging around here instead of just selling off with all this volume, right? That's another sign. Look, all this volume just kind of holding on. So why would the market stay in the one spot when there's a lot of selling, right? Obviously there's still buyers holding that up. Still watching what they're doing. They're still holding up here. Again, on the next area of interest for me would have been here, 628. And at this point, after we already tested this, see, once they start stacking those levels like this, like orders here, orders here, orders here, generally just take out. I just would get out, in which that's why I pretty much got out. And also keeping in mind that we were trading around the high, the top end of value, right? So we're expecting sellers to start coming in over here. So we're just gonna see what they got up here at 625, 626, and then after that, I was gonna make my decision. Okay, sweep them. Okay, look, you guys saw how we just kind of went really fast. I don't know if you guys caught that. We went really fast from this 25 to 27. That's called a sweep. They just kind of bought everything that the sellers were giving. Okay. Now after a sweep, you kind of expect price to just hold its ground. If you don't see it holding its ground, that's a very bearish sign. That means that the sellers are just kind of like jumping into the position. All right. As you can see, we kind of held our ground after the sweep. Okay. All right. We don't see much follow through on the bulls, right? So at this point, we just kind of expect a little rotation. And like I said, I was starting to get a little worried because of we were just trading at the high value. So at this point, I just took my profit and I got out. at 29, at 629, and I closed the position for $11,050. But yeah, guys, it doesn't really matter. The price kept going up eventually after, but 9 out of 10 times you will not um, just sit there and like give up all your profit while the market comes down, because you don't know how strong the sells are gonna come, right? That's the thing that you never know. You know that there are gonna be sellers there, but you just don't know how strong they're gonna be, how aggressive, right? So now it's kind of up to you as to, okay, do I want to am I okay with holding if they sell it all the way down here and then finally they decide to buy and it goes up to where wherever it wants to go? That's where you kind of have to ask yourself, because if we couldn't hold this price any longer, right? And as I saw like some like resistance up here, like I was getting a little bit, um, I was starting to get a little bit not comfortable. I was comfortable in the trade because I had profit locked in, but um, a bit worried that the sellers were gonna come in. Um, it's better just to just to take your profit, and then if they eventually they come down here and I see something else, I would buy it again and write it up. There's no problem with that. That's why it's important to be very flexible and just be very open to whatever the market wants to do and what the market is doing. Okay, don't just kind of try to predict everything and just, you know, oh, I want it to go up here, so it doesn't matter what happens. I'll just, even if it comes down all the way down and then up here, like what's the point of that? You just take your profit down here, up here, it comes down, you wait for it, and then you buy more, and then you take it up again, take it up again, and then, if we get up here, maybe sell it again, right? And then if it starts breaking out, buy it up here and put your stop somewhere below there, and then just take it up. There's many ways of doing it, um, but it kind of just depends on how comfortable you feel in risk and managing your risk. But yeah, let me know in the comments if you have any questions. I'm sure I covered pretty much all the basics of it. But if there's anything that I missed out, do let me know. Um, Thanks for watching, guys.